Good morning. I'm Mehdi Sunderji, and welcome to your Finance TV's Crypto Revolution. We're covering all things crypto and digital assets. We're here with Adam Blumberg, co-founder at Interaxis. But before we get into it, a little housekeeping. Don't forget to like, subscribe, if you want to stay on top of our content. I don't know why I did the weird hand gestures. I'm assuming there's little like buttons and subscribe buttons everywhere. So if you want to stay on top of our content, make sure you do like and subscribe. And always, feel free to drop us a line if there's any topics you want us to explore in depth. Adam, it's been a couple of minutes since we last spoke crypto, but obviously there's lots to talk about, and we're back here discussing things. How are you, mate?
Hey, it's good to be here. And Mehdi, if you'd like, I'll talk with my hands as well. I'll use them a lot. I hear people like motion. So yeah, getting the hands in there is a good idea.
I don't know why you went straight to that motion, but we'll not ponder on the reasoning behind that. That was a strange way to kick things.
It really well. Yeah, I didn't really have anything to use them for, so I just naturally they open and close.
Okay, let's go with that. So, I've lost my thoughts now. There's always a little bit of conversation around regulation and all this type of stuff. Let's just kick off with Gary Gensler.
I won't use the hand motions I want to use for this part. How about that? I'll keep them to myself.
Let's tie the hands down for this first part of the chat, shall we? Gary Gensler, the SEC chair, he doubled down on his stance that every crypto asset is a security except Bitcoin.
Look, there are quite a few, I'm sure, that are actual securities, right? It's people raised money, they issued a token against the money that they raised. And the idea is whoever put money in is expecting to get a profit. That's, textbook, here's what a security is. But there are so many more that's just not what they did. Sometimes they just created a token, as an airdrop to give to the people who have utilized their platform. I don't like it for many reasons. One, because, as I've said, many of these crypto assets are not securities, should not be securities. Two, because you're trying to take legislation, you're trying to take regulation that started in the 1930s and apply current technology to it. And it just doesn't make all that much sense. Right. And this is where we can go back to like the spirit of the law, and the whole idea is to protect investors. And we all agree that, right? I don't want investors to lose their money. I don't want them to get scammed. But the whole point of when, the idea of securities law and having to register your security with the SEC started, keep in mind, this is just after the market crash in the 20s and the Great Depression, where people were getting scammed because there were companies that were created and issued stock that didn't really exist. Well, with crypto, you have the ultimate transparency. You can go look and see what's happening literally every second. So it seems a little bit redundant to say you have to come register with us in the way you've always done it. Plenty of people, including Commissioner Hester Peirce, have said, look, we actually don't have a good way. Even though Gary Gensler keeps saying, come register with us, come talk to us, we don't have a way to register crypto assets because it doesn't check all the boxes. So basically, this is kind of Gary Gensler's way. I somehow, for some reason that I can't seem to figure out, of completely trying to rid us of crypto. And they've done other things, right? They're trying to attack who the custodians are that financial advisors can use, people can custody their assets with. And in all these little actions, they're trying to get in there. Crypto is securities, cryptos are securities, right? So to where if any of them get passed, they can go back to that law or back to that regulation and go, see, we passed, or we had a judgment or something that says crypto is a security, and therefore we get to regulate it, right? So we don't like it. But in the absence of Congress passing some new law, of course, a congressional law would supersede anything the SEC does. In the absence of that, we're left with the SEC and Chair Gensler kind of running roughshod over crypto right now.
I feel like all of our financial lives are either in the hands of the SEC or Fed commentary right now, and everything seems to be up and down on the back of one comment after another.
Yeah, and the unfortunate part of it, Mehdi, is I've talked to so many teams in the last several weeks that have just said, look, we're not going to be in the US. We're not going to launch our product. We're not going to launch our service or our token, our protocol, or whatever it is. We're just not going to launch it in the US. There's plenty of people in the world that want this, and we're just going to go elsewhere because we're not going to deal with it. And what it's going to do is it's going to move the builders to the rest of the world, the developers to the rest of the world, but it's also going to move this new financial system to the rest of the world. And then the US is going to be stuck playing catch up instead of trying to lead it. And those are the issues. And it's all going to be in this quote interest of investor protection, when in reality, it seems more like the interest of the SEC trying to plant a flag and have power.
Well, it's interesting you say that about going, outside of the US, or there being a focus on outside the US kind of establishments. Even looking at some asset managers, obviously the largest asset managers in the world probably center around the US as it is. And they're kind of left holding their hands up. But like, look over at Germany. There was a note out about DZ Bank. They're Germany's second largest bank, I believe, in terms of assets, and they're fully integrating digital currencies into their asset management services. This is a big deal. This is great. This is full on adoption. Bring it in.
Yep, this is, like you said, the second largest bank in Germany, which we know in the past has been a pretty progressive, financial company or country, and it's kind of this, financial hub or a financial center, one of the financial centers of Europe. And for the second largest bank to start offering crypto is a pretty big deal. And look, selfishly, I want more financial professionals, more advisors and accountants and bankers and stuff to go learn crypto so that they can help their clients. Because if the second largest bank is offering it, there's a 100% chance more investors and more clients than you think are going to be invested in crypto.
And forget that political side of stuff. Let's have a look at some of the actual technology, right? So Coinbase, they're in the news all the time for all sorts of different things. This was very cool, right? So they've now they've brought in what's it called? I'm blanking here. Base.
Right. They're creating what's called a layer 2 on top of Ethereum, right? So Ethereum is this kind of base layer, not to make it incredibly confusing, but Ethereum's the network, and it's the network where we really keep track of everything. And we call it the settlement layer, right? It's the layer that keeps track of what you have and what I have and what this company over here has and what that protocol over there has. It's keeping track of that. And layer 2s have been created to speed up transactions and to as a transaction layer. If I'm going to send you something, or I'm going to start lending or borrowing or participating in some protocol, the Ethereum layer, that settlement layer, is too slow. So we have layer 2s. We have layer on top of that. Well, Coinbase is coming out with their own layer 2, and based on the news that they put out there, based on the press releases and the articles and everything I've read, it's going to be decentralized and open source. So it's not going to be owned by Coinbase. It's not going to be something they totally control. They're going to create the code. They're going to open it up to developers to develop applications on top of it, such that it can process transactions much, much faster and much less expensive. They said that they want to get transaction costs down by a magnitude of 100x, right? So I can transact using Ethereum so much faster using this Coinbase. Now let's think about the ramifications of this, right? Coinbase has 100 million users. Okay, 100 million accounts at Coinbase with I don't even know how much money is there. I don't even know how much in crypto assets is there, and I should probably know that. One of the biggest problems we have and that we've seen is with centralized exchanges like we saw with FTX that have lost customers' money because obviously what they did was completely fraudulent. But there are some risks with putting my money with Coinbase, with having an account at Coinbase. It can be hacked, it can be exploited, whatever. The government can shut them down, whatever. When I move onto Ethereum, onto another chain, onto an actual blockchain, I no longer have most of those issues. Right now, I get to custody. I'm holding on to my own assets, which, by the way, is the entire point of crypto. So now you have 100 million users. I don't know how many billions of dollars worth of assets at Coinbase. That is now going to be a lot easier to go from my Coinbase account to the Ethereum blockchain. Okay, now something else important to keep in mind. Coinbase could have launched their own layer 1. They could have launched their own network like Ethereum or like Bitcoin. They said it's not worth it. Ethereum is decentralized enough, it's safe enough, it's secure enough, it has enough transactions, it has enough liquidity. We're going to launch on top of that. That's a huge vote of confidence for ETH, for the Ethereum network, and for ETH, the cryptocurrency, in my opinion. They've launched this, they're launching this layer 2. They're having it open source. All the major protocols that you and I have probably talked about here, that some of the watchers or some of the listeners might know, Aave and Compound and all that, they're all building applications for this layer 2. So when it launches, I'm going to probably be able to go from my Coinbase account easily into a wallet that is able to interact with the Ethereum blockchain, and I no longer have those centralized custody issues. This is a monster deal, in my opinion. Assuming it works, assuming the code is out there and it's good and audited and all that, which I assume it will be. This is a monster vote of confidence for Ethereum, but this is huge in terms of adoption, right? Because Coinbase is already the easy button in terms of buying crypto. Now it's going to be the easy button in terms of buying it and then moving it on chain. This is a huge deal.
And the point I was trying to kind of lead into it, not so eloquently, was the fact that all these things happening, I feel like it's starting to reassure. I don't know, I find it reassuring for me, especially after all the FTX debacle that we had, all the fallout from that we still continue to see there's still remnants of that the issues around that. But and just not to keep going back to Gensler, when Gensler makes these types of comments of we're almost wanting to eradicate crypto, I feel reassured when I see things like this, because I feel stabilized, the fact that this is just so widely adopted that people are not going to let it go away. It can't go.
No, and that's the whole point. Look, things like regulation, whether it's from a regulator or just from Congress trying to pass laws, those take a lot of time. And instead of sitting around and waiting, all these builders are going, we're just going to keep building stuff until you literally come to knocking on our door and tell us we absolutely have to stop or we'll go to jail. We're going to keep building it, and people are going to keep adopting it. And that's the market saying we want this. And so eventually what happens, Mehdi, is those that are in power or trying to be voted into power are going to see that and go, look, here, I feel like crypto's okay. We need this. We want this. We want to be innovative. We are going to, pass laws, and I'm going to run on a platform that says I'm going to pass laws that make crypto acceptable and okay. We are not going to go under this, regulation by enforcement regime that the SEC has right now. So again, it's Coinbase, it's DZ Bank in Europe. It's everyone just pushing forward and going, look, until you absolutely tell us to stop, we're not going to worry so much about what you talk about in terms of regulation. We're just going to do what we need to do.
And even on the retail side, Robinhood, there was an announcement today earlier about their wallets, right?
Exactly. Robinhood finally, they've been, on Robinhood, you can buy crypto, but they had talked about they're going to release a wallet. Well, now if you have an Apple phone, so if you have an iOS device, you can download the Robinhood wallet, right? So which is separate from owning crypto in a Robinhood account. Now you have the wallet, which means I can transact on Ethereum. I can, participate in some of these protocols. I can lend and borrow and stake and all of those things without it being with a centralized custodian. This is a big deal. And if I want to put on my, my planner DAO hat, my teaching financial advisors hat, if you look at all these things, you look at DZ Bank, you look at what Coinbase is doing, you look at what Robinhood is doing, the clients and the users and the adopters are trying to get away from centralized custodians. They want to adopt, they want to put their money in, they want to see what crypto is, and they want to use it. They want to get away from centralized custodians, and they're wanting to go to self-custody. If you're an advisor, an accountant, a banker, a lawyer, whatever you are, you better start learning this stuff, because your clients are going to walk in the door with a wallet, whether it's Robinhood or Coinbase or MetaMask or something, and go, I need help. And if you don't know what to do, they're going to go to the next advisor.
So you touched on it briefly there as well. Let's take a slight little detour here. Let's talk about DAOs, centralized autonomous organizations, as the word DAO stands for. They're starting to be looked at in regards to the universe of corporate finance. This is, again, you've been a big proponent of DAOs for the last couple of years. I feel like I learned about DAOs from you, and you've been feet first in that whole universe. How do you think the application towards corporate finance will work?
Look, I think it's not for everyone, right? And I know about it because I started a DAO, right? I started and helped run Planner DAO. for financial professionals. And we started it when DAOs were the hottest thing ever. And everyone and their mom created a DAO. Like you and I would go to dinner and like, let's start a DAO so we can figure out where we're going to go and put money in and all that. And it's evolved differently than what people thought it would be, but that's the nature of innovation. But I think DAOs are going to be relatively important within a corporate structure. There are many in the DAO community that think every corporation is going to be a DAO from now on, and I don't feel like that's accurate. I feel like there still needs to be some hierarchy. One of the features of DAOs, I guess, is kind of a lack of hierarchy. And there still needs to be some of that with a lot of corporations, but DAOs are going to provide some. I guess they're going to have a place, is what I'll say. They're definitely going to have a place, whether it is small companies or whether it is huge companies like a Google that says, look, we need to have we need to have groups within Google that operate kind of as DAOs, that operate kind of in this decentralized way, that everyone in the group kind of gets to vote in a certain way, and we're just going to earmark some money to them and they can figure out how they're going to split it up. That might be where DAOs fall in. I think a few weeks ago, Mehdi, you and I talked about how Japan has even looked at utilizing DAOs for their own government, right? Parts of their own government, not the whole thing, but parts of it. It's going to fit in certain places. Obviously, with what we're doing with Planar DAO, it fits as a nonprofit group. It makes complete sense for what we're doing. So there are many, again, in the DAO community that think DAOs are everything's going to be a DAO. We need to have communities for everything. And that's just not the case. It doesn't make sense everywhere, but there are a lot of places where either a lot of companies that are either going to operate as DAOs or have DAOs within their structure, or just take some of the things that they're learning from DAOs, some of the things like voting and proposals and all that, take some of what we've learned and just say, look, we're just going to take that, but continue with our corporate structure the way it is. But we're going to take some of those things we learned because that's what we do to evolve.
Money never sleeps, but money never dies either, but we do, right? So away from a DAO side, let's go back to some more innovation and some more application. We've got blockchain technology, and now let's look to apply this to the last will and testaments and how crypto wealth is passed on to successors, and your inheritance and everything. This is a great application. I see this as phenomenally efficient versus traditional last will and testament type situations.
It could be. And there are a few different ways to talk about this, right? So obviously, when we're training financial advisors and accountants and lawyers, we have to talk about crypto inheritance. And the main thing when we talk about crypto inheritance, especially when we're talking about things that you hold in your own wallet. I'm not talking about your Coinbase account, but I'm talking about if you hold things in your own wallet, if you hold assets in your own wallets, there's the legal side and then there's the technical side. And with crypto, the technical side is more important than the legal side. Okay, because I can have in my will that my wife gets my 10 Bitcoin, but if she doesn't have access to the wallet, it doesn't matter. Right? She can't get it and she can't use it. There's no judge on earth that can go, okay, Bitcoin Corporation, you have to open this up to Adam's wife, because from a technical perspective, it can't be done. So there's the idea of inheritance of crypto, and it takes some nuance in terms of the technicals. As a matter of fact, I'm advising a project called Crypto Legacy that is built around this. How do you allow for inheritance of crypto assets? How do you get that wallet or the seed phrase or something to your spouse or to your kids or to whoever you want your beneficiaries to be, to trustees or whomever? Then there's the aspect of utilizing the technology, right? Which is what I'm talking about there. How can we use the technology to say, this is definitely my last will and testament? Or it's going to be operated via smart contract that when I die, bam, it kicks into place and everything just gets distributed as it should. And we don't have to go to lawyers and we don't have to go to probate and all those things. There are just steps you have to take. Step one is, let's figure out what the process actually is and make sure that it's adhered to by the financial professionals, the legal professionals, right? Let's make sure we don't have situations where someone dies with $100 million worth of crypto and doesn't leave it to anyone because no one got around to helping them do that, right? Because they held their seed phrase or their private key themselves. Then let's figure out what the next version of technology that can help us with. Is there a technology that can get my wife my seed phrase without me handing it to her or without me giving it to the lawyer, which is the worst thing you can do? Then next is, can I wrap all my assets in something like a smart contract that triggers when I die and therefore disperses everything? And then you have to, for that situation, which by the way, I love theorizing on those things. It's one of the first use cases I thought of for crypto. What was last will and testament or inheritance. But you start to have to go, all right, how does this blockchain know that I'm dead? Like, how does it know that I've died? How can someone, if my wife gets mad at me, can she go, call someone and go, hey, guess what? Adam's dead. And bam, get all my stuff. And lo and behold, I'm not dead. Right. So what can we do? Like, how are we going to make sure that that system is foolproof? Because once you have a smart contract that runs, there's no taking it back. Okay. So that's kind of the progression of what we're looking at, is make sure we have the process down, build an iterative technology in the middle there that says, like 5 people have agreed that Adam is actually dead and therefore his wife's going to get a seed phrase. And the next is, how do we build a technology such that the blockchain knows I've died and can just distribute things?
You could always just tie it into a subscription with the New York Times obituaries.
That would be, I guess, one way to go. Yeah, well, we'll get right working on that. The New York Times is so crypto favorable.
It raises a lot of issues, concerns, roadblocks that can come with all these things. But that's why we're here talking these things out, because it starts getting ideas percolating on one, how do we do it? What are the roadblocks? What are the solutions? So I feel very confident we'll find ways around all these things in the next several months, years, decades, but we'll get there.
I agree. This is the fun part of people, experimenting with the new technology.
It's all about the percolation of ideas.
Yeah.
Adam, before we wrap, I see today's show as a bunch of positives, right? There's been adoption, DZ Bank. We've seen Coinbase now on the layer 2 applications. We've got DAOs in death, and we've got all sorts of things going on. Everything's great, adoption. We still have concerns. All right. So there's been some exploitation. There's a lot of, a counter exploit recently by Jump Crypto on the wormhole hacker, stole a ton of ETH. How do we kind of balance the positives and just diving right into this with these concerns still hanging over us?
Look, I think there are a lot of those concerns, right? There are concerns about exploits and hacks. There's concerns about centralized custodians losing their money or being fraudulent. It's going to take a lot of due diligence. Anyone who's in this should embrace the transparency of this and embrace the fact that you can look at all the code if you want to. You can look at what's happening with all these wallets and see where it is. And that's what is happening. There's a lot of discourse going on around this wormhole hack that you alluded to, right? It was last year sometime that the wormhole, which was a bridge, got hacked for, I think it was $600 million or something like that. I don't remember what the exact number, maybe 300 million, but I think it was Jump Trading, basically.
I think it was about 300 million. Sorry.
Right, okay, about 300 million, but they were responsible for a lot of it. It was a lot of their funds in there. And so obviously when someone hacks that, you can watch where that money goes, right? You can see it move from wallet to wallet to wallet. And as long as that person doesn't move it onto like Coinbase, where they've had to go through KYC and Coinbase knows who they are, we're not necessarily going to know who that person is. And it's going to be really hard to get it back. So at some point down the road, this person or people or whoever moved, I don't know, like 180 million or 120 million dollars into this protocol called Oasis, a wallet or a pool of this protocol called Oasis. So everyone can see this. Again, it's transparent. They got with Jump Crypto and said, look, here's where the money is. And the people at Oasis, the team at Oasis, basically said, we are going to go in and give Jump access to that wallet so they can drain it out, right? So they basically exploited the hacker, exploited that particular pool and took that money back out. Now, On the positive side, you go, oh, good, they got a lot of their money back, right? Like this is what's supposed to happen. It's kind of the equivalent of like what the FBI would do, like go get the money back. Except for the fact that now with Oasis, you go, okay, where do you draw the line? Where do you draw the line with doing that? This is supposed to be decentralized. You're not supposed to be able to do that, even though you know full well that that was money that was exploited and stolen. You shouldn't be able to do that. And the part that is actually a little bit reassuring, Mehdi, is most people in the crypto community are completely against what they did. Most people say, yeah, we're glad some people got their money back. However, you crossed a line. That's a line we don't cross, because once we do it once, you're going to do it again and again and again. And once you've done it once, then the next time the FBI or someone comes to you, you're going to have to do it again, because they're going to go, you did it for this one company. Why won't you do it for all these other people that were exploited? Why won't you, do it for the people we're trying to get money back from? And then you can't say we're totally decentralized anymore, because you go, okay, these three people at the top of Oasis decided we're going to open up this pool. It's again, it's reassuring that so many people are so against it, going, it's against the ethos of what we're trying to build. And that to me is a positive step to go, we know what we want to build and we know the directions we want to go. And when you cross the line, whether it's for good or bad reasons, it's not right.
Adam, that's a moral conversation and a moral dilemma, which I completely agree with. And and you're right, it does create that gray area. And is it more of a Robinhood situation? Is it a Ocean's 11 type scenario where this heist is done on a bad dude, old Andy Garcia, got his money taken away? But it makes for a great conversation, but in reality, it is creating these gray areas that we don't necessarily want to start going down that route. So lots to focus on there.
Yep. Agreed. And so this has been a great conversation to have, coming back after a few weeks, right? We went all over the place.
And we've been all over the place, and that's what we always do under Crypto Revolutions here. Adam, as always, love chatting with you about everything to do with crypto assets, and I certainly learned things, and I hope our viewers do as well. And I want to urge our viewers to check out Adam's course on digital assets and crypto education. There is a website there, so you can have a look, and I'm pointing with confidence it's there. Don't forget to also subscribe to your Finance TV. You'll get more content like Crypto Revolution. Until next time, thank you, Adam, and thank you for our viewers for watching, and good luck investing.